show you some exam papers related to financial statements. So see this one. I will go through one of the past paper that the examiner is asking you to prepare income statement. I will show you. See here the last question. Question number 7B, 7 Roman number 2. They're asking the statement of profit or loss. Profit or loss mean income statement. Then the statement of financial position they're asking. So this is one of the question that is there. So having 4 marks in your paper, all the questions are not compulsory. In the section B, then in your paper it's a 3-hour paper. The first section having 40 MCQ questions, 40 MCQ, those are compulsory. Under the second section, there are 7 comprehensive question. Out of that, including number one, you must prepare. Including number one, you must prepare 5 questions, right? Including number one, you must prepare 5 questions. There are option. There are two selective questions. Either you can do out of 7. Only required is the 5 questions, right? Right. So we'll prepare some journals. So prime entry books. So the prime entry books are table format. Prime entry books are table format used to prepare, used to record, record transactions, transaction on their occurrence, date, order, right? There are 7 prime entry books. There are 7 prime entry books. There are 7 prime entry books. So these are the number one, you can say sales journal. Number two, purchase journal. Number three, sales return journal. Then purchase return journal. Then cash book. Cash book. Then petty cash book. And the final one is general journal. Right, we'll study number one, sales journal. Sales journal. Here we record only credit sales of inventory item. Record only credit sales of inventory items. Credit sales of inventory item. Here the source document will be sales invoice. Right, very important. So here this journal, this format is used to record only what? Credit sales of inventory item. Credit sales of inventory item. So very important, right? Inventory item. And we record what? Credit sales. Are we going to record the cash sales? No, we don't record the cash sales. Here the source document will be what? Sales invoice. These highlighted words are very important. So I saw one of the paper that has been tested, one of the question in the sales journal. We'll see that one. in this paper. They have tested here in this question with the 4 marks. The purchase journal. We'll do this one first. It's fine. Purchase journal. This is 2021 paper. 2021 paper. Question number 5-4. 2021 O level past paper. Actually, here they are not asking the sales journal. So we'll prepare one later, a sales journal. So this is purchase journal. We'll take the number 2, purchase journal. Here that we record what? Record credit purchase of inventory items, credit purchase of inventory item, right? In the sales journal we record the sales of inventory item. Here we record what? Credit purchase of inventory item. Here credit purchase important. Then the other one is inventory item. Here the source document is purchase invoice, right? Source document is purchase invoice, right? So just look at this example. 2021 O-level past paper that has been tested a question. The following are purchases of the credit. And now see the purchases. On credit from the Sahan's business, they have given just 3 transactions, asking you to record the above transaction in the purchase journal. Now see in Sahan's business. Then record the transaction in the purchase journal in relevant ledger account as at 31st Jan 2023. Then they ask you to do the ledger posting. This is the format of the sales journal. So all these formats are little bit same. Therefore, it's easy to remember for you. Purchase journal. Purchase journal. Here we are having a date column. Date. Then invoice number. From whom we are going to purchase. Supplier. Then description of the goods, item, quantity, price, value, and the total value. This is the general format of the purchase journal. Not hard. Right. So this is having date. Source document is invoice number. Then from whom you are going to purchase, then the supplier name. supplier name, then description of the good, description of the good, item, quantity, price, value, and here total value, total value, right? So just update the information here. So we'll update. So date is 3rd of Jan, 3rd of Jan, invoice number 65, supplier Pubudu, then item, they haven't given item, quantity, price, value is only given, total value 25,000. Just copy. Then 10th of Jan, 123 invoice number from Asanka. They have not given the detail. Total value is 18,000. Then 25th of Jan, invoice number 135 from Saman. Total value is given here 12,000. Right? So that's it, the information they have given. Get the total here. Get the total here. So the purchases journal total came here 55,000. Purchases is what? Expense. We have already learned. Purchases is what? Expense. So expense increases what we do? Debit. Then I will write here 31st of Jan debited to purchase account. Right, so this is the table that you must prepare for the exam related to purchases. Right, then they ask in two things: record the above transaction in the purchase journal in the Sahan's business. It's done. Then they ask in the ledger posting. So we need a purchase account. We need a purchase account, and we need how many creditors? Three people. Then four altogether. Purchase account needed. Then we have four creditors. Pupudu Asankan one. No, three creditors. Right, done. Then the first purchase account debit the total value here. Purchase account debit here 31st of Jan. Creditors total. You put the total here 55,000. You put the total here. No need to put the individual values, just put the total. Then we have how many creditors? Three creditors. The first man is Pubudu. Pubudu's account. Credit on here 3rd of Jan. Purchases. Purchases. The value is 18,000. Then there is one more Asanka. Asanka credit on when? Asanka 1st of Jan. Purchases. How much? The first man is 20,000. 25, no? Sorry, I have done a mistake here. The first man is 25. Second man is the 18,000. Here, 18,000. Then the third man is Saman. Third man is Saman. Saman's account. Credit on when? 25th of Jan. Here description is purchases Value is 12,000. Right, see here, the double entries that we wrote. The purchases is an expense, purchase account debit, purchase is an expense, purchase account debit. Relevant creditor will be credited. Relevant creditor will be credited. Right? Was it understood you all, student? Was it clear to you? Shinal, Pubudu, Naveen, Manishka?
Yes.
Very good. Others?
Yes, sir.
Very good. Anything to clarify, please ask. Right, very important. So purchase account, we have already learned. Right, just again summarize. Here, purchase. Now the sales purchase journal we learned. Right, purchase journal is used to record credit purchase of inventory item. Here the source document that is used is purchase invoice, right? So the double entry related to credit purchase is purchase account debit. It's an expense increases. Relevant creditor will be credited. Relevant creditor will be credited. Just we'll do one more question here. There is no question. Let me see from my one. See this question. This is an example for sales journal. Here we learned that. So in the sales journal, what is the transaction that we will record? Credit sales of inventory item. Credit sales of inventory item will be recorded. Right. So credit sales of inventory items will be recorded. Here, look at the example given here. The following transactions are related to the credit sales of the Reliance Electrical for the month of March 2018. So basic information they have given us asking prepare the sales journal of Real Electricals for the month of March 2018. So I will copy the same format that we used to for the purchase journal. Same format you can use it. I will change the detail here. Not the purchase, sales journal. Date is there, invoice number is there, not the supplier, that will be changed to customer. We do the sales to our customer. Customer name, the rest is in same. So description of the goods, item, quantity, price, value, total value is same. Right, we'll record it. The first transaction is on 2nd of March. Invoice number 256. Customer Green Traders. So item switches. Switch quantity 75 units, 75 quantity. The price per unit 115. Then the total value is 75 into 115 is total value comes to 8,625 for the first transaction. Second one, 15th of March, 257 invoice number, customer Mr. Nihal. We have done bulbs, 100 quantity at price 230. So 100 into 230 quantity into price, you get the value. And there has been a 10% discount that has to be deducted. See here, minus trade discounts. It's 10%. So if you are receiving any discount, if you are giving any discount, that has to be deducted. Here, 23,000 of the 10% is 2,300. Then the value after the discount is here 23,000 minus 2,300 is 20,700. Right? Then the third transaction, 30th March 258. So Chandana stores switches. Again, the quantity is 110 quantity, price 115. Then the value is 115 into 110, 12,000. No any discounts. Then the total value of the sales journal is these three total 41,975. Sales is an income. Sales is an income. Then here 31st March credited to sales account. Very important. Were you able to understand, students? Were you able to understand, students?
Yes, sir.
Very good. Anything to clarify? Right. Okay. Very good. So then sales is an income. So income increases, what we do? We do debit. Sales is an income. Income increases, what we do? We do debit. Sorry, credit. We do credit. Then we'll open one sales account and three account for the individual debtors. One for the sales. Here, sales account. Then we need green traders. Then Mr. Nihal. Then Chandana stores. Chandana stores, right. So sales will be credited on the total 31st March. Debtors, the total value is 41,975. Then debit to green traders on 2nd of March. Sales 8,625. Then Mr. Nihal debit on 15th March. Sales 20,700. Then 30th March. Sales 12,650. So very easy. See here, students. Right? So we have learned two journals. Just to summarize what we learned now. So one is the sales journal that we use to record the credit sales of inventory item. Right? Credit sales of inventory item. We will be recorded in the sales journal. Then so here the double entry that we learned here. Sales is an income. Sales account credit. Relevant debtor debit. Here the total of the sales journal came 61,000. 41,975. So sales account we have credited here. You can see sales account has been credited. And the relevant debtors, here we have three debtors. Green Traders, Mr. Nihar, and the Chandana stores that has been debited. Right. So remember the double entry that is used for the credit sales is relevant debtor debit. Here the relevant person. Then sales is an income. Sales account will be credited. So here the source document is sales invoice, and here we record the transaction, that is the credit sales of inventory items. Very important. Then we learn the purchase journal. Purchase journal again the same thing opposite way. Same thing, that is in opposite way. So here that we record credit purchase of inventory item. Source document is the purchase invoice. Here the purchase journal total, that what we did. Purchase account debit. Relevant creditor credit. So you can see 55,000 came the purchase journal total. The purchase is an expense. Purchase account debit. Relevant creditor credit. Right. So here I must say that you can't mix this journal and write the transaction. You can't mix this journal and write the transaction. So if it's a sales journal, you will write only the credit sales of inventory item. If it's purchase journal, you will write only the credit purchase of inventory item. Right? Likewise, all the several journals that we learned here are recording only special transaction. Here the summary is sales journal. We record credit sales of inventory item. Right? So the source document is sales invoice. Done. Here purchase journal we learned. Here we record credit purchase of inventory, credit purchase of inventory items. Here source document is purchase invoice. Very easy. Right. Very easy. Right, we'll prepare a cash book. So we learn the next journal, that is cash book. Number 3 is the cash book. Third journal we learn cash book. Here we record only, so easy. Here we record only the cash transaction. Cash transaction. Maybe transaction made in cash, that is coins and notes, or the transaction maybe that we have done in bank, through the bank account, through the bank current account. That means through the checks. So here transaction made in cash. Cash mean coins and notes or bank. That means check transaction. Check transaction.